So I was just planning another video today around the topic of the ARK Invest new Tesla price target, what I think about it, and also what we can learn about it for NIO, my update on the NIO business case. But just something happened here in this trading session today that I found quite noticeable and important. So I want to prioritize that and talk about this one first, and then later on in another video I will talk about this other topic. So I think what we are seeing today is actually a sell-off in Chinese stocks and also some news maybe around delisting and US and EU-China relations that are worsening. That's just my feeling that I'm getting here. And then on the sidelines also news around, for instance, NIO and other Chinese EV stocks that are going for Hong Kong and gonna list there as a secondary offering. And I found that quite significant in today's trading. So let's have a look. So first off, this is Tesla stock and it's been doing quite well in the morning session. We had to spike up more than 5%. Actually looked like it was breaking out of this wedge pattern. And also NIO was doing quite well in the very beginning. And also some other Chinese stocks like Baidu was actually up in the green, as well as most of the other Chinese stocks actually, and tech stocks were kind of recovering. But then we had some interesting news here about EU imposes China sanctions over Xinjiang abuses. And this has to do with the European Union imposing sanctions that, well, it didn't do for a very long time, actually. So that's the significance of this news, that they now picked out some individuals, Chinese officials, I guess here, that will in the future be restricted from traveling and also having asset freezes and so on. So quite severe consequences for them about the issue about what's happening in the Xinjiang region. And so this is a new EU policy move, and it also obviously affected Wall Street, because we can see here on Twitter, Walter Bloomberg posted that US allies are announcing sanctions on China. So now this just happened within today's trading session. And what I noticed is that actually most of my Chinese stocks that I'm watching suddenly were in the red. For instance, SAP Healthcare as well, Futu Broker, Tiger Broker, but also the big stocks like Tencent, Meituan, Alibaba. And it's quite rare that you see all of these stocks at the same time being in the red if it's not for a tech correction. So there is something significant going on. And as I mentioned before, in the morning, some of these stocks were actually in the green. So I do actually think that this news had some implications there. And possibly there is this black box around the EU to China as well as the US to China relations right now. For instance, with the Biden administration, we don't really know what's going to happen. The delisting fear about Chinese stocks is still unresolved, and we don't know how the new president is going to handle it exactly, although there are indications that we are getting a solution there. And I'm still in the opinion that actually ultimately it will be the goal of both China and the US to keep those stocks listed. However, with now those worsening relationships now just between the EU and China, but it's still something to watch in my opinion, because usually the EU is quite, let's say, hesitant in order to do such kind of sanctions, and they wanted to keep their relationship with China especially well, because it's a very important trade partner, and usually they're not so much into those games like the US China trade wars. So it's definitely having a new kind of notion around it, and it will certainly maybe create, at least for now, a little bit of uncertainty and fear around this topic. And this is obviously what the markets are usually hating, especially if it's policy driven, because then there's not much that can be done around it. But if you remember, my thesis is for 2021 to be invested in those Chinese stocks, because I think what will count in the end are actually the underlying economics and also the growth rates and the earnings per share and so on. And I still expect them to be better than what we see in the US and also in the EU, of course. So I still think this investment thesis is overall intact, but it may be now in the shadows of what is happening politically. Now, this also brings me to a topic around NIO and also Xpeng and Li Auto, which are now rumored to make a secondary listing at Hong Kong Stock Exchange. And I spoke around this before, but now today I have some news which I'm talking here in the Patreon community that it seems to get more credible and more intensifying here, that NIO has already picked Credit Suisse and Morgan Stanley, and it's even considering a share listing. Xpeng is going with Bank of America and JP Morgan, Li Auto with Goldman Sachs and so on. So these are still rumors, but having such kind of detail and specifics for now means that it seems to be something in the works here, something in the background is going on. So this doesn't definitely mean that it's going to happen, but from the sources that I have this, I'm trusting them. There seems to be something, going around here. And so now in the context of this EU-China relations, that's quite interesting to see, because I think, well, such a move could obviously be an answer to the US-China relations in terms of the fear around delisting, but now also with maybe EU-China relations becoming a little bit tougher here, maybe this move, this homecoming of stocks in general, of Chinese stocks, moving to Hong Kong Stock Exchange might be actually a good fallback solution for most of the Chinese companies there, and maybe becoming now actually more credible given those tensions on the broader context there. So what would this mean, for instance, for NIO as well as for investors? So first of all, I think it would enable companies like NIO to generate new cash through a new offering, and thereby also causing more dilution to existing shareholders. I think that's the most likely outcome, that new shares being offered for this Hong Kong listing, and that's obviously also making the cake a little bit bigger. But what we see with the offerings of, for instance, Alibaba and Baidu and so on, is actually that those offerings are pretty much oversubscribed. There are lots of Asian investors that want to trade at Hong Kong Stock Exchange. It's also easier for mainland Chinese to trade at Hong Kong Stock Exchange. And then these companies are usually oversubscribed if they are offering shares at Hong Kong Stock Exchange, and therefore this dilution is quickly eaten up by an increase in the stock price. So overall, I actually think if that's going to happen, it should have those positive signals that we see also, for instance, when JD did it, when Baidu did it, when Alibaba has done it. Mostly we see actually positive implications on the stock price. And it comes with some other benefits. For instance, then you don't have to wait for the US markets to open, because actually you could then trade NIO stock, for instance, at Hong Kong Stock Exchange. You can also sell all of the stock that you have in the US, nominated in US dollars, and buy it instead in Hong Kong. Both of the stock prices should actually align. There is this little bit of arbitrage trading going on there, but in the end, the stock exchange is just the place where the stock is actually traded, and the valuation of the company should still not be impacted by that. So meaning that if NIO is progressing their business, the stock price should also increase. If they show positive earnings per share and so on, that should be rewarded by whoever is trading at Hong Kong Stock Exchange as well as in the US in the future. And thereby that's giving some more security for NIO, some other ways of tapping into new liquidity, and also, frankly, a fallback option if, for instance, the US-Chinese relationships should go really bad under the Biden administration, where I still think that this risk isn't that big, to be honest. I still think that Chinese stocks in general won't get delisted because there is too much interest. And actually also from the Chinese side, there is now the first signals that, for instance, Chinese investors should be allowed to invest up to $50,000 in stocks on the US market. Most of them possibly will invest in the Chinese companies, which they know well, but that's also now one of the big reasons why companies like NIO possibly, or Baidu, of course, and Alibaba and so on, are also listing in Hong Kong, because that's where the investors are, who are understanding the company and therefore are interested in obviously getting a piece of this pie. So that's the bit of the news around NIO going to Hong Kong Stock Exchange, but also now in this new broader context of political issues around Chinese, US, EU, China relations. And I think we certainly should watch that. I just noticed this today in the trading session, that I think there was an implication of this news, although in my point point of view, it's not so severe in case of those 4 people that get asset frozen and also travel bans. But there might be some backlash from the Chinese side that they have some retaliation, and let's see how this develops over time, whether or not the Chinese officials will be impressed by that, and then thereby maybe the relations are also worsening. Anyways, the fundamental thesis, in my point of view, is intact. I think we should rather look at the valuations of the companies as well as our growth prospects in the future. There will always be fear, uncertainty, and doubt and issues around stocks and most certainly around China. So that's gonna be a bumpy ride. That's why, as always, I can only be the messenger of this information. You need to do your own due diligence. You need to be aware of these issues and then do your own research. So thank you guys for watching. See you in the next one, possibly on the ARK Invest price target.